We are now joined by Mr. A V Rajwade, consultant in currency and interest rate risk management. He is joining us from Mumbai. Thank you so much, Mr. Rajwade, for joining us here on NDTV Profit. Yesterday, we actually saw the rupee touching 61.03 to the dollar, but today we saw some strength coming back. But the weakness that we have been seeing, according to you, what could be leading to that?
Well, I think there are two possibilities. Number one is, of course, that the portfolio inflows have come down or could have come down. It could be a phenomenon for a day or 2 days or 3 days, or there could be a growing perception that the market is now, equity market is now fully priced. Also, my memory is that the bond market ceiling for foreign investors has been more or less reached. So I think it's only equity markets where portfolio investors can come in now. That's one possibility. The other is that the central bank, which has been much more active in managing the exchange rate over the last 1 year, I think sees that the trade deficit is still very high, which means that the domestic economy is not competitive in global markets and could well like a lower rupee, although it will have some corollaries in terms of both inflation and, of course, the oil subsidies or product subsidies.
Right. We'll talk about the macros also in a bit. But before that, Mr. Rajwade, I would like to understand how much of a risk do you actually see on the currency now, considering, on the timeline of Fed actually hiking interest rates, which the speculation is that it could happen sooner than expected?
Yes, there is some possibility of that. When exactly it would happen, I don't think anybody knows. Not probably even Ms. Yellen, the chairman of the Federal Reserve. I think to the extent of our exchange rate, I think far more influential is going to be our own central bank and what kind of exchange rate it is comfortable with. I think what we have seen is that it has been persistently buying dollars in the market, which is reflected in the higher level of reserves. And I think that shows that it is very conscious of the need for having a rupee which is reasonably competitive, or which makes the real economy reasonably competitive.
Right. Mr. Rajwade, for quite some months now, the rupee has been trading between 58 to 62 or thereabouts. Now, like you mentioned, the RBI has got a lot of reserves, and the RBI governor has spoken about being prepared once the Fed hike starts to happen. But then there's so many other factors working in our favor. Growth seems to have bottomed out. And perhaps there will be more inflows should the reform process get even faster. Also, the deficit condition when it comes to the current account deficit situation is now under good control. So much so that now people are talking about a rating upgrade for India. Doesn't that protect the downside for the rupee then?
To an extent, it does. I think the current account deficit is much more manageable now than what it was until the curves on gold imports and so on and so forth under the previous regime. But one of these days, the duty will need to be reduced. I think the curbs on gold imports may go. That apart, I think what we need to remember is that remittances are considered as earnings under the way current account is calculated, the current account deficit is calculated. But if you look at it from fundamental terms, from basic terms, remittances are not earnings of our economy. And I think the lost output because of the exchange rate is probably much better represented by the trade deficit rather than the current account deficit, and that is still very large. I think at the current level of oil prices, one should be looking at something like $150 billion for fiscal 2014-15. And mind you, this despite the fact that oil prices, global oil prices have come down significantly in the last 3 or 4 months. Now, how long those softness in oil prices will last is anybody's guess. I think we all know how volatile that part of the world is as of now, with wars in Syria, wars in Iraq, and I think they could easily start impacting the oil price. So I think overall, to my mind, we are not out of the woods completely. And the second element, I think, which we need to keep factor in mind is that reserves is one way of which attracts a lot of headlines. What I think much of media ignores is the net international investment position. You know, that number started getting reported only 2 or 3 years back, but to my mind, that's a far better way of looking where we stand rather than purely the reserves or the current account deficit. And I think there, that number is reaching, at least to me, rather worrying levels. The last number was $330 billion net external liabilities. Now that's a very large sum of money, almost 17-18% of our dollar GDP. But we'll have to wait for the end of the month to get the data as of June 2014. Right. The number I mentioned is as of March.
Right. So what do you think is a competitive level for our currency, and what do you think the RBI governor will be comfortable with, and the government?
Well, I think it's going to be a very delicate balancing act between growth and employment creation on the one hand, and fiscal deficit and inflation on the other. And I think it's very difficult to say which would be given greater weightage over the coming months.
Right. You know, last time when we saw the rupee actually touching that level of 59.9 was 91 was on 14th of July this year, and yesterday it touched 61.03. You know, in the next 3 to 6 months, for example, where do you see the range actually hovering around, according to you, where it should be?
Well, I don't think I'm a forecaster. I think an astrologer might answer the question better. But I do hope that we have a rupee depreciation, at least sufficient to compensate for inflation differential. You know, inflation is still very high by global standards. So I think somewhere down the line, that will have to get reflected, that needs to get reflected in the exchange rate.
Right. And also, since oil has been in the news for quite some time now, and we've also been talking about it, you know, this falling crude oil prices, it's quite a volatile scenario at this point in time. But considering what's actually happening right now, excess supply and, you know, very low demand, you know, the current oil prices, do you see them, you know, staying at this particular level or sustainable at this particular level for some more time?
I think in terms of the global demand-supply situation, my answer would be yes. On the other hand, as I said earlier, that part of the world is still extremely volatile. I think we all are reading reports about what's happening in the Middle East, which is the largest part of the oil-producing nation, largest part of OPEC and oil-producing nations. So I think with no major disruptions in terms of the Middle East, I would expect the oil prices to steady around the current level.
Right. We've seen some information coming in that Saudi Arabia is deciding to cut oil output in August because OPEC has cut down the demand outlook. Given the fact that the dollar has strengthened a lot, what could be the outlook for commodities that India imports quite a bit? And given the way that the rupee hasn't really crashed as such, it's only weakened slightly, how comfortable are we when it comes to our trade deficit?
Well, I am not very comfortable, but I look at the deficit more as an output and employment loss rather than something whose only problem is how to finance it. So I think from that angle, I am still uncomfortable with a deficit of something like 150 billion, which is what I am looking for in 2014-15. As far as the strength of the dollar globally is concerned, and the oil, I don't think that there is the one relationship is that the US, which was the world's largest importer of oil for quite some time, I think it has reduced its imports significantly after the discovery of what they call shale gas or shale oil and all kinds of new ways of producing energy. As far as the other commodity prices are concerned, I think far more significant is what happens in the Chinese economy rather than in the US economy. China today is by far the largest importer of all commodities, including oil. Oil, copper, iron ore, whatever you name it. And they are by far the largest importers. And I think the Chinese economy would determine the commodity prices globally, would influence the commodity prices globally even more than the US.
Right. Mr. Rajwade, initially you said that CAD is in a manageable position at this point in time, and worst in a way seems to be over for the economy, at least for the time being, considering a 5.7% GDP growth rate. And yesterday the government, the cabinet also approved 3 big ticket divestments in Coal India, ONGC and NHPC, and they are expecting to fetch a lot of money out of those disinvestments. First, do you think now the government will be able to meet its fiscal deficit target of 4.1% for this fiscal year? And second, the kind of situation that we are into right now, the market condition and various other factors, do you think the disinvestment process of these 3 particular companies will become successful?
As for the latter question, your last question, my answer is relatively simple. I think timing wise it is good if they do it now with the stock market at the level it is. Yes, I think it will work, it will succeed. As far as the fiscal deficit for the year as a whole is concerned, at the end of the years, every finance minister has, what shall I call it, has used a lot of creative accounting to make sure that the deficit target is met. And government accounting or government revenues and expenditure accounting is extremely opaque. So I think, yes, chances are that the target will be met, but I don't know whether we are not giving too much importance to that number, because if we look at the total picture, I know the rating agencies sort of swear by the fiscal deficit, but the reality is that government debt as a percentage of nominal GDP has been falling actually for the last 10 years. So I don't think that fiscal deficit is such a worrying feature. To my mind, the bigger worry about that deficit is not so much the quantity of that deficit as the quality of the deficit. It is coming out of expenditure, not out of investments. So I think, I beg to differ with my friends in the rating companies that the fiscal deficit is a major problem. I think our total government debt as a proportion of nominal GDP used to be 65% 10 years back. And I think today it is below 55%. So it is falling. I don't think it is anywhere near worrying levels at all.
All right, so clearly it is not anywhere near the worrying levels. We leave it there. Thank you so much, Mr. Rajwade, for joining us here on NDTV Profit. It was a pleasure chatting with you on a host of issues, from the currency to the crude oil to actually what's happening in the economy and the divestment process as well. Thank you so much for joining us.